Hi, and welcome to our 5-minute tax update for June 2017. There are a number of important developments this month, so let's quickly set the countdown clock and start. We will first look at the most important local developments. After years of endless debate, the National Health Scheme law was finally approved by Parliament, and after a gradual implementation period, the NHS is planned to be in full operation by the 1st of June 2020. In accordance with the law, every individual who has income is expected to contribute to the cost of the NHS. The contributions will range from 2.65% to 4.7% and apply to employees, employers, self-employed, pensioners, state officials, and the state. However, there are still many issues that need to be clarified, the most important of which being whether this will apply to all individuals irrespective of their tax residency, domicile, or source of income. I suggest that you watch this space for more clarifications as time goes by. We have an interesting development in the definition of tax residency for individuals. A tax bill was submitted to Parliament proposing the amendment of the term Cyprus tax resident so that an individual who does not spend more than a total of 183 days in another state and is not a tax resident in another state will be considered a Cyprus tax resident if the individual is resident in Cyprus for at least 60 days in the tax year, is employed or self-employed in Cyprus or holds an office in Cyprus at any time during the tax year, and he maintains a permanent residence in Cyprus that is owned or rented. What is important to note is that in the year that the person becomes non-resident in accordance with the normal rules, these provisions will not apply if the individual terminates any employment, office, or business carried on in Cyprus in the year of departure. Interestingly, the Bar Association, although agreed to the philosophy, disagreed with the above amendment and submitted to Parliamentary Committee an alternative proposal for consideration. We should keep an eye on this so as to see if it is finally passed as it is or whether amendments are made. Last Friday, the notification on the new law on the settlement of overdue taxes was finally published in the Gazette. The notification applies to the years up to and including 2015 and specifically covers overdue taxes for which an assessment has already been issued before the application is made and amounts due based on self-assessment. The application for these should be made within 3 months from the entry into force of the law, which is announced in the notification as the 3rd of July this year. The notification also covers taxes due that are assessed after the entry into force of the law. In this case, the application should be made within 3 months from the date that the tax becomes due. Interested parties should apply electronically to join the installment scheme via the computerized system available on the Ariadne portal. They would then be able to pay their installments either through this system or via a bank. Finally, on the local tax updates, the Tax Department has issued an announcement that during the summer period, and especially in August, there will be a delay in the issue of the expedited rulings due to lack of staffing. It has also announced that the deadline for the submission of the CRS information from financial institutions is the 21st of July 2017 and not the 30th of June. We will start our international developments part with some good news from the European Commission, which assessed as non-harmful the Cyprus tax regime for intellectual property rights, which has been enforced from 1 July 2016. The assessment was carried out by the European Code of Conduct Group in the context of an evaluation of all the tax frameworks for intellectual property rights. The approval effectively means that the framework is in line with BEPS Action 5 on countering harmful tax practices more effectively. Last month, a revised decree on country-by-country reporting was published, providing a number of clarifications on the provisions of the previous decree. One of the most important changes is that there is no local filing or notification obligation for 2016 for a Cyprus constituent entity in case the ultimate parent company or a surrogate parent entity does not file a country-by-country report in its home location. A local filing and notification obligation arises for 2017 onwards. There are also a number of other important amendments which can be found in our tax alert issued on the 30th of May. On the 7th of June 2017, Cyprus formally signed the multilateral instrument along with other 66 countries and jurisdictions. The measures to be implemented with the MLI will strengthen the existing tax treaties to protect governments against tax avoidance strategies by including tools in the treaties to ensure that they are used in accordance with their intended scope. We will close off today's tax update with a brief reminder of the deadlines coming up. 31st of July is the deadline for the electronic submission of the 2016 personal tax return by salaried individuals whose gross income exceeds $19,500 for the tax year 2016. However, this deadline has been extended until 30th of September 2017. 31 of July is also the deadline for the electronic submission of the 2016 employer's return, the submission of the provisional tax return, and payment of the first installment. And lastly, 1st of August is the deadline for the payment of the 2016 tax balance through self-assessment by individuals and companies preparing audited financial statements. This concludes our tax update for this month. Thank you for watching.